India's economic growth is expected to remain broadly on track in the third quarter of FY24, despite growing at a slower pace than what we saw in the previous quarter. GDP for this quarter, for the October-December quarter, is estimated to grow by 6.6%. That's according to economists polled by Bloomberg. That's lower than 7.6% in the previous quarter. GVA is expected to expand to 6.4% compared to 7.4% in the previous quarter. For the full year, GDP is estimated to grow by 7% according to the first compared to 7.3% according to the first advanced estimates. GDP grew by 7.2% in FY23. Now, the figures are set to be published on February 29th at 5:30 p.m. And for a quick preview on their expectations from what's going to come up in these figures, I'm joined by Upasana Chatra, India economist at Morgan Stanley, Suvadeep Rakshit, senior economist at Kotak Institutional Equities, and Madhavi Arora, global lead economist at MK. Thank you so very much to all three of you for taking time out for us today.
Thank you.
So I'll start with you, Madhavi. We're looking at a fairly wide range of economist estimates this time around, both for the Q3 figures as well as what is the estimated growth for the full year. For instance, according to the first advance estimates, GDP growth was pegged at about 7.3%, but I'm assuming most economists expect that number to actually come in a tad bit lower. What's your expectation going in and why?
So hi Pallavi. So we are also looking at a relatively lower real GDP growth for the year. Our expectation is close to around 7% as against the first estimate of NSO at 7.3%. Just to note that the first estimate which was done, obviously it is susceptible to a lot of revisions because it is largely done by using extrapolation or limited data inputs that we have, and the data point is basically done to essentially gauge the growth outlook in general for the next year's budget. So basically, there is a good chance that you would see a big revision, in the data print, because the second half of the year, if I look at the 7.3% forecast by the estimate of the NSO as a base case, then the second half of the year should grow at close to 7%, which I don't think would be the case. I think we are more towards 6.5% second half growth, with the third quarter probably printing close to 6.7%, which is still higher than what I was expecting, say, early part of this year. So there clearly has been a much better than expected, activity rebound in the economy. And I think second half would be slower than what the first estimate of NSA expects. But that said, it definitely is better than what I was expecting early part of the year.
Okay, all right. So, Upasana, quickly coming to you, while like Madhavi to broadly outline, we're expecting the second half to grow a tad slower than the first half, but of course still grow at a faster rate than what was expected at the start of the year, for instance. Could you throw some perspective on what's happening? Is the growth in second half, which is expected to be slower, largely on account of the base effect, and what are the other reasons?
Hi, Pallavi. Yes, sure. So, as Madhvi pointed out, and I would concur with her view that the second half of the year, in terms of YOY growth rates, we will see a moderation. That's what we are building in as well. Our estimates for fiscal 24 are also lower than the first advanced estimate. So, we are expecting full year growth at 6.9% and thereabouts, lower than 7.3 that the first advanced estimates is pegging it at. The key reason for this is that there is this base effect which will catch up. So, while the YOY growth numbers will look as if they are moderating, I think the sequential trend is still showing going to be pretty strong and holding up the momentum. That's what we are seeing when you look at the high frequency data points as well. So I think when you look at the numbers for, say, December quarter, which we'll get day after, or the March quarter data, the YOY numbers will moderate from the first half, but the underlying growth momentum should not be read as something that is depicting a slowdown or a moderation, because sequential trends will still be pretty strong in our view. And it's more about the growth trend sustaining. So what's the view that we or what's the trend of growth that we can see going further into calendar year this year of fiscal 25? And I think that's where more important, where we think that growth will be able to sustain around the 6.5 handle. So for fiscal 25 also we expect growth at 6.5%. So it's more about base effect catching up. There will be some amount of interplay of the deflator as well, which or the pass through of the lower input cost prices, as we know, which helped the September quarter GDP, that will also start normalizing. So factors like these will be at play, which will throw up a lower YOY reading versus the first half.
Okay, all right. So, Subhadeep, coming to you, before we can actually delve deeper into some of the industry-wise trends, I think for a lot of us, the bigger question this time is on private consumption. The figures that we saw in the previous quarter weren't particularly encouraging. What's your expectation from consumption for this quarter? Do you think we can expect a better figure? Are you seeing signs of improvement there?
Not necessarily. I mean, a better figure is subject to a lot of, I think, statistical discrepancies, etc., how they are, kind of factored into the numbers. But I think broadly, if you look at the trend in terms of consumption, if you look at the kind of growth numbers in terms of volume growth numbers that some of the FMCG companies are talking about in the recent earnings season, as well as in terms of the rural as well as the urban split in terms of some of the sales of these companies, doesn't seem to kind of indicate that there is a significant increase in the consumption growth as such in this particular quarter. We know the fundamentals broadly have not changed. If anything, urban consumption possibly is probably the drivers of urban consumption is slowing down. And that could continue to indicate that consumption overall remains on the slower side.
Okay, all right. Coming back to you, Madhavi, so Subhadeep just touched upon private consumption. No particular reason to expect any strong improvement there. But what's your reading of the rural economy? It's been a point of concern for quite some time now, and it does appear that we're beginning to see some signs of improvement. What's your takeaway? And then, of course, added to that, agriculture. In the previous quarter, agricultural growth was also only at 1.2%. Can we expect a better figure this time around?
So with regard to rural, again, we're getting very mixed trends. And those are, again, cyclical stories, right? On a secular basis, we look at the rural economy since 16-17 has been largely sluggish, partly led by the fact that the real wages in the rural sector have, grown on an average of +2 or -2% year-on-year growth. So that itself sort of explains that, because of the lower rural income in general, there's been a lower rural consumption overall. Within rural as well, I think the composition of employment has changed probably in favor of agriculture, which is now moving at the margin again back to services. But possibly the reason why we saw a much lower rebound in the rural consumption was largely because of the, skewness again towards agriculture as a base for employment versus, say, services, which is a much better paying and a much more productive sector. But I think that is also improving at the margin. But again, as I said, structurally, you still have to see better income growth in the rural economy in general to be able to expect a big rebound in the rural story, which is yet not happened. What was the other question? I'm sorry,
I did want to ask you as well about the growth in agri GVA. So we saw a fairly tepid figure the last time. Agricultural GVA growth came in at about 1.2%. And like you've mentioned, even up until now, we continue to see mixed indicators when it comes to rural. But can we expect a little bit of an uptick in that figure there?
So the government first estimate of Kharif crop was a contraction of, I think, close to around 4.6%, if I'm not mistaken. But, and we need to see, how much the agriculture GDP would actually be impacted by the patchy and uneven monsoons that we've seen through the year. But at that said, I think second estimate could get revised higher, as it has been the case in the past. And also, other subsectors like fisheries and horticulture are also now, sort of gaining more importance in agri and allied activities. So they may also offset a part of the weakness that you would see in the core agriculture sector.
Okay, all right. Coming to you, Pasna, we saw particularly strong growth, double-digit growth in mining, manufacturing, and utilities the last time around. Construction too, of course. So this time, especially, let's start with manufacturing. What's the expectation this time around? And also now, do we expect the benefit that companies saw from lower input costs? How do we see that panning out for them this time around, and in terms of corporate profitability? Can we still expect strong growth in manufacturing this quarter?
So yes, manufacturing I think was the biggest surprise in the last quarter in terms of the upside that came in the overall GDP numbers as well, and growing at a double-digit level on a real basis. I think that number is going to moderate when we look at our estimates for December quarter, but still remain pretty healthy. So you can't expect it to continue growing 13%. I think that will see moderation basis the high frequency data that you can see for the manufacturing related data points for the December quarter. And that is, I think, going to reflect in the GBA numbers as well. So we are expecting that number to moderate to somewhere just probably below double digits, so in the 9 to 10% range. This is being driven, as I mentioned, by the earlier in your earlier question about by the lower pass through or the normalization in the benefit from the input cost pass through as well. So if you look at non-food WPI inflation, that was contracting by about 8% in the September quarter, and that contraction has lessened to, I think, 3 or 4%, if I remember correctly. So, that's like, no, obviously it is, that continue reducing, and that's, in real terms, that will eat away some of the benefits if you have to think about it. So real value added will get impacted by this trend of normalization in non-food inflation as well, which was a deep negative in the September quarter. This is getting reflected in the corporate profitability trends as well. So if we look at corporate profitability trends, the YOY of that remains very strong still in December quarter, but has moderated from the September quarter levels. So I think at the margin that will impact the YOY numbers that we see for the manufacturing sector, which are probably going to see some moderation versus the September quarter.
Subhadeep, coming back to you, tell us a little bit about what's the expectation in terms of the industry-wise breakup. In the previous quarter, we saw manufacturing, utilities, and construction do much of the heavy lifting on the industry-wise trends, at least. This time around, what's the expectation? Services is broadly expected to stay strong as well, considering the lift from the festive season. How are you looking at it?
Sure. If you look at the industrial sector, obviously a very large, in fact, it was quite evenly distributed in September with the double-digit growth practically in all of the four industrial segments: mining, manufacturing, electricity, as well as construction. But if you look at the current quarter, I think obviously some of these growth numbers will moderate because of the base effect, etc. But specifically, when you're looking at manufacturing, I don't think there is much of a let up that you might be seeing in terms of the growth rate, because typically when the government looks at the the GDP or the GVA estimates or the GDP estimates, a lot of it comes from the corporate earnings. If you look at the corporate earnings and look at some of the key manufacturing sectors, one of the largest sectors is the oil and associated industry, along with chemicals, autos, etc. If you look at the oil marketing companies and some of the oil companies, they were generating losses in the last couple of quarters, which is in last year, which is basically the September and the December quarter, which is why you would have seen a negative growth or a contraction in both those quarters in manufacturing. In this quarter, obviously, those companies have been registering very high growth, obviously turning profits. And in terms of other sectors also, the profit growth has been pretty high. The volume growth could have been very muted, or revenue growth could have been muted, but the profit growths have been exceedingly well. And that will continue to reflect well in terms of the overall manufacturing sector growth. Construction, on the other hand, there is some amount of weakening, if I may use the term, in terms of at least the year-on-year growth rates in terms of, let's say, IIP Cement or IIP Steel, etc., which could reflect in a lower or maybe a single-digit growth in terms of the construction sector. So overall, industrial sector should remain in high single-digit. Along with possibly a very low single digit in terms of the agricultural sector, and the services sector continues to remain strong, obviously buoyed by the sales that we have seen during the festive season, as well as the real estate sector, the financial sector, which has been pretty strong. Just one weakness that you might see on the services is possibly on the government spending part, which had gone slow from September onwards. And that might reflect on the public administration and defense part in the services.
Okay, all right. Madhavi, I know today shows a special on the GDP figures that are scheduled to come up, but you did touch upon the rural space, and it does get me back to some of the findings that we saw from the household consumption expenditure surveys, you had put out your thoughts on that. How does the picture sort of come together for you at this point? You did mention that the findings from the survey were somewhat at odds, as a lot of us thought about the strength, the health of the rural sector. Any explainers possibly on what's the reason behind the possible dichotomy? Some of the theories, of course, were that more rural households dipped into their savings to be able to finance their consumption. But what are your thoughts?
So again, India does not have an income survey, so you really cannot understand what really happened in that. This is a consumption survey, and various narratives can be made looking at the cross-section or time series data. But that said, as I wrote in my note as well, that India is a growing economy. One should expect anything but a linear behavior in terms of consumption or income patterns across various deciles of rural and urban economy. That said, there were some positive points definitely with regard to the rural segment as well, where we saw that there was a convergence happening in the rural and urban segment. The aspirational economy is, of course, improving. The gap between the average urban and rural spending generally has fallen dramatically over the last decade or so, and that is largely happening at the middle and top bracket of the economy. So all of that is definitely positive, but of course, as you mentioned, things that we also wrote in our note is that rural sector generally has a very high, relatively higher marginal propensity to consume than the urban sector. So assuming that we did see rural wages being a little bit stagnant, it is also possible that they dipped into their savings to ensure that their consumption patterns remain healthy and probably increase their marginal propensity to consume even more. But that's again a theory which doesn't really have a substantiated data to back my thought process up. But that said, there were certain positive segments in the economy which basically showed that the urbanization or the aspirational aspect of the rural economy has continued. Of course, there were different stories that you can play out depending on what strata of the economy that you're focusing on.
Right. So, Vadeep, coming back to you as well regarding the survey, you did point out that consumption expenditure, when adjusted for inflation, is not particularly encouraging. Could you elaborate a little on that?
This is with regards to the expenditure survey that you're talking about, right? No, see, the numbers are there as put out by the government. So if you look at the numbers, broadly, rural growth has been on a CAGR basis over the last 11 years have been at the rate of 9.2%. And if you're looking at the urban, that has been at around 8.5%. But if you look at it from the real terms, that has been close to 3%, right? So that's the weakness in terms of the real that you are seeing. While price effect would have led to a high nominal consumption growth, but on a real basis, that number is on the weaker side compared to the historical or the past surveys. I mean, a couple of surveys before this that you would see.
Okay, all right. And with that, we're completely out of time. Thank you so very much to all three of you for taking part in today's discussion. And we hope to hear more from you once we do actually have the figures out. Thank you. Stay tuned to NDTV Profit. GDP figures are scheduled to be published on February 29th at 5:30, and we're going to bring everything around the GDP figures and more regarding what to make of these figures then. Till then, stay tuned.